I got to start with coronavirus. You just got off the panel, Investing Trends 2020, 2,000 advisors here. What are you telling them they should be telling their clients right now about this?
Yeah, these advisors showed up thinking about Senate hearings. They thought about global trade, earnings season, and all of a sudden you got the virus. This is a lot of new information that's coming in. I think people are defensive, going to cash. We're seeing the rallying treasuries. What we're trying to do is say, look, longer term, interest rates remain very low here. So we're talking about if you need to remain in equities, think about low volatility. SPLV, thinking about buying the lower volatility names, but remain invested in this market until you hear more.
That SPLV, low volatility, was a surprise hit, kind of came out of nowhere in early part of 2019. Huge inflows. You're saying that's a possible alternative for people who want to be a little more defensive?
Possibly. I think for those who really need to go to cash, obviously should be thinking about it. But if you think about long-term portfolio allocation, as more information comes out potentially around this and other macro events, if you need to remain invested in equities, low volatility is a consideration.
SARS was an event for about 2 months for the markets about 15 years ago and then passed. Hopefully that will be the same case. Is there some indication that that will be different this time around, though?
I have no idea. Again, this is kind of all breaking. But again, I think for those investors who can really stay focused on long-term outcomes and really thinking if nothing's changed in their personal circumstance, think about maybe making some adjustments to the portfolio, but remain long-term focused.
I want to move on to the monster ETF that you manage. That is the Triple Q's, second most actively traded ETF in the United States. Monster inflows last year overall, largely a technology fund, but not completely.
That's right.
Do you expect inflows to continue? Do you expect growth? This is the ultimate growth ETF.
It is.
Do you expect that to continue in 2020?
Yeah, you're right. The QQQ, it's been the leading not only ETF, but even growth mutual fund over the last decade. Heavy exposure to those sectors, IT, you mentioned, telecom, as well as some consumer discretionary. I think, look, in this low interest rate environment, that's very favorable to technology. And if we continue to see some improvement in the global trade discussions, again, it's a product that should do well.
Triple Q is sort of the anti-value ETF. There's no banks in it. There's no energy stocks in it. Do you anticipate growth will outperform value once again? This is an old story. I keep waiting for it to change, but it doesn't.
Look, that's a really tough call. Growth has had such a long, decade-long outperformance versus value. But I would say if you look at the strength of a lot of the underlying companies that are performing well in the index, the outlooks, remain reasonably well. I'd say if you need growth in your portfolio, this is a good name to look at.
Number one topic here before coronavirus hit was really ESG, environmental social governance. It was a little bit of a joke in the last 2 years. A lot of people thought this is a great idea, but not many people put money into it.
Yeah.
All of a sudden in 2019, it blew up. Money came roaring into this sector.
Right.
It's a big topic here right now. You think that it's going to continue into 2020? We're going to see big inflows.
Well, I think if you look in certain parts of the world like Europe, ESG is table stakes, right? European investors and big fiduciaries are really focused. I think here in the U.S. it's been more thematic. If you look, we've had for over a decade thematic clean energy, solar, water. You've had good, environmental related. I think the focus more on governance now, stakeholder, the focus of the Business Roundtable, for example. So those elements are coming together. I think the theme of ESG is still kind of playing itself out, but the long-term potential is likely to be impactful.
Got to let you go, but we're reaching economies of scale, I think, is the important thing with clean technology. You run the solar ETF, TAN, huge inflows last year. What, up 70%?
66% last year, absolutely.
And finally hitting that economies of scale.
And getting scale is absolutely right.
All right.